Good evening, good afternoon, good morning. We're spanning many time zones here today. So wherever you are in the world, thank you very much for joining us for our webinar today entitled Developing National Payment Infrastructure in Southern Africa. My name is Lindsay Lear. I'm the Managing Director of Payments and Commerce Market Intelligence, and we're thrilled to have you in today's session in which we're going to be diving into some of these geographies, looking at the development of local payment infrastructure and learnings from a very special and exclusive report by Arkwright, which we'll get into those details in a moment. But welcome, and we hope you enjoy today's session. We go ahead, just a very quick mention of PCMI. If you're not familiar with us, Payments and Commerce Market Intelligence is an insights and strategic advisory group dedicated to the global payments industry. Our founding members have over 30 years of experience helping multinationals develop strategy in the payments industry, specifically in emerging markets. And our strength really comes from Latin America. Many of you who know us as the premier group in Latin America. However, we're in the midst of a large global expansion, currently growing our expertise and our coverage of Africa. And for that reason, today I'm so honored and thrilled to be helping to host today's session, in which I'm going to be learning right alongside all of you. So if we go ahead to our next slide, I will introduce our speakers today. I'm really honored and pleased to be joined by two very esteemed gentlemen and professionals in the industry. We'll start with Franceso Burelli, a partner at Arkwright Consulting, who's the main author of the report that we'll be going through today. And also Dr. Robert Ochola from AfricaNenda, one of the foremost voices in the development of local payment infrastructure and financial inclusion in the Africa region. So welcome to you both. Thank you for being with us. I'd love for you both to just take a moment, tell us a little bit about yourselves and your organizations. So please, let's start with you, Franceso.
Hello, thank you, Lindsay, and welcome everybody. My name is Franceso Burelli. I'm a partner with Arkwright Consulting. So I've been around in payments for something like 25 years, starting from an early career in transaction banking and then transitioning in consulting. And within the payment space, I had the privilege of working almost everywhere in the world, across the full spectrum, from cash management, liquidity, down to prepaid, mobile money, closed loop wallets, and so on, down to platform ecosystems. And we also work, as you can imagine, with payment processors and central banks and companies that are actually running and providing the payment infrastructure of countries. A bit on this later on, because then we will touch on the idea that led to the study. Arkwright Consulting is a strategy boutique for offices based around Europe. We work literally all over the globe as a group of specialists. And I am part of the payments and digital banking practice.
Fantastic, Franceso. It's a privilege to have you with us, and we're looking forward to hearing more insights directly from you. And Robert, let's go to you. Thank you for being with us.
Thank you very, very much, Lindsay. A very good morning, afternoon, good evening to everybody. My name is Robert Ochola. Today I'm dialing in from Nairobi, Kenya, where I'm based. I would say that I've been in the payment ecosystem for probably about 20 years. My journey started in 2006 or thereabouts. And of course, unfortunately, at the time, I was sitting on the wrong side of the spectrum. Everybody knows about M-Pesa, but they don't know about what we were doing at Celtel to try and counter M-Pesa. But that's when I started my journey. So I spent quite a few years in the telco space, focused on Africa and Middle East, building payment systems, doing strategy, doing innovation. I also spent pretty much the same period of time in the banking arena, based in Nairobi, but also based in Cairo, covering Africa. So really excited about today's session. AfricaNenda is a pretty young player in the ecosystem, but our focus is to drive financial inclusion in Africa, and we do it by helping build payment systems which have inclusivity built in. Really excited about today's session, and I think some of the issues that we are grappling with will come out, and hopefully we'll have an amazing conversation. Thanks, Lindsay. I'll pass that.
I'm sure we will. Thank you so much, Robert. I think we will have a very rich and exciting conversation. Such a complex region, so many factors at play. And so if we go to the next slide, we will turn it over. The way the session is going to work today, now that we've done our intros, we will invite Francisco to walk us through the key findings of an exclusive report that will be made fully available to you all at the end of this session. It's a full-length PDF. We'll just be going through some of the main conclusions and the highlights today, and Francisco will walk us through that. Following that presentation, we will have a panel discussion in which we'll invite Robert to kind of respond, get his insight and perspective on some of the themes and topics and findings discussed in the slide deck, and we'll have a dynamic conversation between Francisco and Robert. And we really invite and encourage you to ask questions. Towards the end of the webinar, we'll take your questions that you submit, and if you just at the bottom of your screen, you can click on the Q&A button there to submit your questions, and we will try to get to all the questions that you submit. That will help us have an even more rich and exciting discussion. All right, so let's go ahead and move right into our discussion today. So Francesco, take it away.
Okay, so thank you, Lindsay. So first of all, let me start with a bit of a T's and C's and an introduction here. So how the idea of this report came about. We've done acquiring projects in the region, looking at the merchant terminalization and the type of services that are available or could be introduced in order to push foster merchant payment acceptance. And then at the same time, we had at one point a question around the effective payment inclusion advancement. So there is a lot of investment that is going in the region, a lot of initiatives that are very laudable and undertaken. But the question is, are we really achieving what we are meant to achieve? And we got another stream of thinking and research and so on that looks at the drivers of uptake and successful innovation, but that's for another time. So that, first of all, a bit of background. Secondly, what we got here are a set of directional opinions. So we have ended up combing a sample of markets for data. All the data is sourced, so it's coming from the website and the reporting of a number of organizations, from central banks to World Bank to all the various banks in the country. Literally, we haven't left a single stone unturned, trying to make sure that we were not missing anything. So we took a sample of markets for looking at evidence that the deployment of specific infrastructure has led to results in terminalization and so on. So we're going to see what the data says in a second. So why SADC? SADC, so domestic switching payment infrastructure in the region, has been in development for over 50 years. But based on what we're finding, there's still a huge potential in terms of financial inclusion, technical functionalities that are common to other markets that we don't see happening here. And what we got on this slide is just a representative selection of various events and various initiatives that have happened during the year in the region. It's a representation, but there's been a lot going on. So this is a region that technology and initiative-wise is not the last kid on the block in terms of what has been happening. If we can move to the next one. Here we jump on the data, and so here we got data from a variety of sources. Everything is in the appendix. But if we look at the SADC market, 13 out of 16 countries have a card penetration of less than 30%. And to be true, personally, once again, an opinion, South Africa is a leading beacon in the region, but South Africa wouldn't be any close to what it is without the benefit disbursement program, SASSA, that has been placing a lot of cards in the hands of a lot of people. So we have a massive amount of potential for further card ownership. So this is just moving very quickly because mindful of time. The latest available data that we got on the market consistently is 2021. So these are the figures. We got the absolute numbers on the graph. But if we look at the color map, the heat map, there's still a lot of potential to be taken in the market. If we move to the following slide, please. Here we got terminalization. So we've done quite a lot of research across a variety of markets. And where we started initially developing these type of market maps with the split of merchant divided by size and so on was during the acquiring projects. And unsurprisingly, like any other markets around the globe, we got micro and SMEs being the large part of merchants. We got the statistics at the very, very bottom, but if we look at the number of terminals in the market, there's not a lot of them. And we know for certain that these market sizing are underestimating the absolute numbers, simply because micro merchants are likely to be way more than what we managed to capture or somehow to source and to assume, simply because they tend to operate into the gray economy. So we know that we would be pretty confident in saying that these numbers are underestimating the actual market size. So when we look at the number of terminals overall, there's not a huge amount of them. They vary significantly from market to market, but nonetheless, there is still potential that is untapped. Next one, please. So here we go into the mobile money space. And there is also a usage gap, despite the fact that mobile money has been really transformational in the region. And this is, on one side, driven by an element of affordability of 4G devices. And on the other side, there's an element of connectivity, data connectivity in particular, that is not yet fully comprehensive across the region. So we got about a quarter, just under a quarter of population that is not reached by data coverage. And out of the 75% that has the ability potentially to have data connectivity, there is a usage gap of about 2/3. This data is from GSMA statistics, similarly to the mobile money prevalence index, where we see where mobile money is higher used in higher adoption based on a number of different parameters that are tracked by GSMA. For those interested, they publish very, very interesting reports. So I would refer them to our sources if they want to have more details around these numbers. And curiously, we are seeing a sort of indirect correlation between card usage and mobile. Not sure why that is the case. We haven't been looking into detail, but it's just out of curiosity. If we move to the following slide, here we have instant payments. So instant payments are a very interesting category in their own right. So the immediacy of a payment that is settled, cleared in a matter of really second is a category as a definition that is a little bit gray and fuzzy in the sense that there are deferred or faster, more frequent type of payment solutions that are categorized as an immediate payment. But if we go down into detail based on what we've been able to find, so everything is subject to what we've been able to find, we got 4 initiatives that are in the market, of which South Africa, that is currently live, Namibia, that is a more frequent, is not immediate, is a more frequent type of solution. And we got Tanzania and Zimbabwe, where curiously we haven't found evidence of transaction reported by the respective central banks. There's a lot more other initiatives in development, but these are those that we found that we would categorize under a stricter definition of instant payments. If we move to the following slide, so this is overall providing a sort of landscape background of what we found in the region. interlinking is a complex type of innovation. It's the more complex of all. And in here we found two initiatives that have been undergoing in the market. One, SADC, TCIB, and finally the SMME Digital Financial Inclusion Project, CBC, both of them very laudable initiatives. They've been around for a while. In the case of SADC, TCIB is 2015. And as of now, we had a pilot in that case with no reported transaction or no volumes and uptake. And SMME being in a very, very similar situation. I mean, this is not surprising. We had similar type of attempts in other markets, like for example, in Europe within SEPA with very, very similar results. In Europe, we had 5 of them, one after the other. But it's just to point out that payment innovation is difficult, and there is a lot of noise and ambition going around, but getting results is a bit, achieving on the ambition is a bit, can prove a little bit more challenging. If we move to the following slide, again, mindful of time, diving into the 5 markets that we looked into. So as I said, they were selected, I wouldn't say randomly, but we looked at a variety. We picked up something, for example, on the basis of longevity. If we click on here, we look at the year of establishment. So we have infrastructure that has been established in the earlier case in 94. We got 18, that is the younger one, with 5 years of longevity and operation, 2004, 2014, and 2010. So these are initiatives that we've taken because there's been sufficient amount of time to consider them somehow established. And if we click further, one thing that we found a little bit striking and curious, for example, is the participation to these switches. Sorry. So what we have on the top set of numbers are the number of actors in each market. So in terms of number of mobile money operators, number of banks, and number of non-bank financial institutions. So as we can see, there's a lot of them. But if we look at the bottom set of numbers, these are the end. No, wait a second. Go one back, please. The connected banks and non-banks, these numbers are a minority of what we see in out of the total of the market. Just to make a comparison, for example, within SEPA instant payments, and let's take a sample market in Europe, Germany, we got over 1,700 entities that are connected to the switch. So we found very, very curious to see this limited participation, where in reality in the market there is a lot of activity, a lot of players and union banks and other credit institutions and so on. So that is what came out as part of the research. If we go further down, then we looked at the user cases supported by these switches. And for these, obviously, we looked at the switch website. We've been looking at, obviously, we got the view of the acquirers in auto direct research and product experience. We've been looking at every single website of bank, telco, merchant websites, online player, online marketplace, and so on, to see what payment types were available in the market. So based on what we've been able to see, this is the working hypothesis that we got so far in terms of user cases. So there are some what we would consider vanilla payment type or vanilla user cases, like card present, card at ATM, and so on, being common in every market, to be true in every market around the world. But there are some very notable user cases that are somehow missing, like, for example, card present contactless, e-commerce in the vast majority of the market, 4 out of 5, and tokenization, card on file, and so on. So this is what the research has highlighted. If we move down one.
Francesco, just to pause you, there's a very pertinent specific question on this slide I want to clarify. What is meant by hybrid switch?
Hybrid switch is a switch that can transact card and account-to-account transaction. So historically, we had switches dedicated to cards, to account-to-account, and so on. What we've seen over the years is a not yet common, but the emergence of what we call hybrid switches that are able to transact and operate and process across different rails. And in some cases, they bring the benefit of interoperability. So that is one of the great functionalities that we find across all of these 5 markets. For example, this type of functionality is unseen in countries like Europe, in regions like Europe. So that's what an hybrid switch is. So going back to data, so looking at the World Bank data, we have on one side, for example, the share of adults owning a payment card. This is 2021 data, and we have less than 20% for Malawi. That I'm not going to read out the numbers; they are evident on the slide. Then on the other side, we've taken the statistics from the IMF. World Bank for adult population in each of these countries, everybody over the age of 16. We got the number of cards from a variety of sources. We got an estimate of that. So we ended up calculating our own assumption of penetration of card. And in here we have 8%, 21, so very much in the range that is highlighted by the World Bank. On the other side, we've taken the number of terminals that we estimated in each of the market or sourced for each of the market, divided by the number of merchants, and we got a terminalization that is varying significantly between 0.3% in Malawi, huge potential for development there, and Namibia with 52.2. Namibia is a market where we have to say there is no mobile money active. There is one mobile money license that apparently is not yet being activated, but there is no, the financial services are necessarily card-based or banking app based. And then we got a share of electronic payments in retail that is quite, as you can see, has a lot of potential for growth. It goes from 10% of Malawi to 31% of Namibia. And now, if we put all of this in context, electronic payments have been a big driver, for example, of the success of solutions, or electronic solutions in other markets. They've been driving e-commerce, economic development, and financial inclusion in countries like China, Southeast Asia. We got significant developments happening in Latin America and so on. So we wanted to highlight here the potential that is untapped out of the market statistics. So if you have to formulate some working hypothesis here, if we go to the following slide, like there is a common understanding that the establishment of a local switch or a local card and so on automatically leads to inclusion and penetration. But for example, for the 5 countries, just looking at the data, the fact that we got a national switch that can provide some transactions, authorization like card present, face-to-face, person-to-person remittances, but appear to not to be able to support, for example, tokenized transactions online, contactless, and so on, could be a roadblock for development of e-commerce and innovative payment in the domestic space, not internationally. And once again, I mentioned earlier on, we are seeing exactly the same thing out of the vast majority of domestic switches, for example, in Europe and in other parts of the market. There are exceptions, but this is what we are seeing as a common behavior as a common trend in the market. Limited participation is also something that we've been picking up. Like is this hampering local development of fintech and restricting access of global financial services? Now, we haven't been able to investigate the reason why, what are the drivers for that, but we know, for example, that in countries or in regions like Europe, where the regulators are mandated framework like open banking, has been for the purpose of driving financial inclusion, adoption of electronic payments, and then finally competition within the banking space and evolution of the fintech market with all the jobs and economic development that carries forward. The establishment of a domestic processing engine capability does not appear to have supported financial inclusion out of the numbers that we've seen. In particular, the retail segment, the acceptance side, has still a lot of potential to grow. And going back to our acquiring projects, when you look at the potential, the ability to deploy a soft POS or an Android type of terminal, Android POS in the market is what typically can lead to significant terminalization in micro and SME space. This is what we've seen actively out of direct involvement and research, for example, in Southeast Asia. But in order to do that, you need to have the ability to support transaction, specific type of transaction. So there's a question mark around that. And then finally, the overall acceptance is a bit underinvested. What are the drivers of that is a bit of a question mark. Finally, question mark is, are we actually driving at optimal or tapping into the potential for financial inclusion and hence economic development out of the fintech that have been driving a lot of GDP and employment in other spaces? So with that, we get at the end of the presentation. I hope I've been driving through a lot of data, a lot of details very, very, very quickly.
Thank you, Francesco. No, wonderful. It's a high-level glimpse. It gives us a bit of a flavor of what's going on in the region and what your key takeaways are. And almost everyone in the payments industry is focused on payments innovation, in growing the share of digital payments, in cannibalizing cash, and promoting financial inclusion. And so I think these 5 points here really drive some of those learnings, right? What are some prevailing hypotheses that maybe the data don't actually support? So fantastic learnings. Thank you for sharing. And I'd love to hear from Robert at this point. And Francesco, as we go through these questions, please jump in and we'll have a kind of dynamic discussion. And to our audience, once again, please remember, welcome you to ask your questions to the panelists, and we'll throw those questions in during our conversation. So Robert, I'd love to just invite you to, I have a whole list of questions here, but just, to start us off, what are your high-level responses or reactions to what Francesco has just presented?
Yeah, thank you so much. And first of all, I think I want to congratulate Francesco, not just for sharing this volume of data in 20 minutes, but the wealth of work and the value that you're adding to the conversation. One of the things that I know on the continent is there's still a huge amount of data that is not existent, and therefore any body of knowledge that takes us in the right direction. So thank you very much, Francesco. I love the first slide, and I'm not going to talk through each slide. I'm going to give a general view, but the first slide sets out an amazing journey. And I know we're looking at SADC as a region, but SADC to me is a microcosm of the continent at large. And the question when I saw that is, why are we not taking learnings from other markets? If you're talking about some of the historical antecedents and BankServe having set its journey in 1972, and of course now you've got PaySharp being launched this year. But when you look at that SimSwitch, etc., then you wonder, when are we going to start having one conversation and taking learnings as a continent? Because we should not have people running in different directions as if we cannot communicate as one. So I think that's one thing that came out, which was quite important.
Absolutely. I mean, learning from your neighbors, right, and taking expertise and learnings and implementing. So I think those 5 conclusions that you just shared, Francesco, are key to learning from this region, and then also remember, let's take learnings from the rest of the region, also from around the world, 100%.
Yeah, and if I can just add to that, for example, whenever we do projects into infrastructure modernization within a country, or we review regulation, the first step is always a significant amount of benchmarking and updating best practices and point of references, because there are amazing success cases that we can learn from out of the evolution over 60 years of payment infrastructure around the world, going from private to country-led initiatives that we can take as a reference. So there is a lot out there that is pointing to great example, as Robert has mentioned.
No, thanks, Francesco. Excellent. So, and then I think my second point, which again also resonates with your point around the fact that the number of people who are financially excluded today in Africa remains at about 450 million people financially excluded, which is a huge number. And we've done some analysis, and we know that if we continue on the same trajectory that we've seen over the last 10 years, so if we assume the curve stays the same, by 2030, that number only goes down by 100 million. And that's a big issue. The issue that you also raise, Francesco, which also touches base and sort of resonates with something else, was the issue of onboarding of non-bank financial institutions. We see that also in national switches. And when we look at the overall volume that is being done in terms of payment volumes in Africa, and I'll take Africa as a whole, we see that last year, the numbers were around 30 billion transactions a year. If you look at PIX, who I think hit a new record last month or 2 months ago, they're doing 4 billion with 130 million people. In Africa, with a lot more people, we're only doing about 2.5 billion transactions a month. So I think, as you're saying, interoperability, bringing in stakeholders from various institutions, not just the banks and the major MNOs, but also the small and non-financial institutions is critical. And one of the things we've seen is the cost of integration to systems is very expensive. So that continues to be a serious bottleneck. 2 other things before I summarize and just give the 5 points that I like that Francesco put forward is you mentioned the transaction volumes. TCIB recently launched. We interact with them, and one of the challenges was probably the methodology under which it was done. I think it was done without involving stakeholders at the start. So again, I think we need to relook at the journey and where do we bring the ecosystem and ensure they're part of the journey throughout the execution of a project. I think Zambia might complain. Ezekiel believes there are an instant switch. We didn't see that in the data, so that's the only thing. But again, we can discuss that. But finally, I just want to summarize with sort of three areas which talk to the last points you raised. Africa, of course, is a mobile-first continent. So that comes out. But we're still seeing limited fintechs playing in the ecosystem. Cost continues to be a challenge. And I think the governance structure from a policy perspective would help in driving interoperability and hopefully moving up the number of people who are participating. So not just the large banks, not just the large MNOs, but also bringing in non-financial institutions, fintechs into the ecosystem. I think we should do that using regulation and policy. Harmonization of policy across the continent, and you mentioned in SADC is also there. We continue to see disaggregated and fragmented policy regimes across not just SADC but across the continent. It then impacts, of course, the number of people who can participate in not just the digital transformation of Africa, but then economic empowerment and transformation of the continent. And that's why I think this is a massively important conversation. And Francesco, we just met a couple of days ago. And what's interesting about the research work that you put out, it almost cements the work that we are trying to solve. So once again, I just want to thank you for this excellent piece and really looking forward to exchanging. I've got a few other things that I have to say, but I'd like to keep it short because we only have 25 minutes to discuss a very big point.
Well, Robert, you've just given me a wealth of material to draw from to guide the conversation. And we already have several really interesting questions from the audience. So I want to go, this will indirectly address some of the questions and we will get to them specifically. But, I want to, the stat that you just shared, right? 450 million excluded individuals across the continent. And by 2030, that will only go down by 100 million. That was the stat that you mentioned. And that is quite slow progress, right? We've got a lot of time up until 2030 and a huge goal ahead of us. And so, and part of what Francisco shared here was that some of the efforts that have been taking place in some markets, which the thought would be that maybe this would spur on innovation, maybe this would spur on digital payment adoption and penetration, maybe this would spur on financial inclusion, that hasn't taken place at the speed and rate in which maybe we thought it would. And so my question is for you, Robert, and also Francesco, you can jump in, is, with the objective of increasing financial inclusion, how should local market regulators, banks, fintechs, et cetera, prioritize building their local payments infrastructure, right? Local card switch versus instant payment schemes versus mobile money. How should we prioritize that with the objective of building and increasing financial inclusion?
Oh, this is $1 million. Sorry, Robert, you go first.
Yeah, sorry, Francesco, you said
and the background of this question is that some countries have not yet built their own domestic card switch. And actually a couple of questions are specifically referencing that. Not every market has its own card switch. And so should we move forward with building that as other neighboring countries have done? Should we prioritize other types of innovations and efforts on the local level? Not that there's a one right answer for every situation, but what insights can you provide to shed some light on that question?
Sure. And I heard Francesco's point. He said it's $1 million question, and I'm saying it's a very big question you've asked. So today, I think the number of countries that haven't built, I'll speak about national switches and somebody else. What's the difference between a national switch and an instant payment switch? Well, I think people are moving away from national, well, not national. It is a national switch, but you want it to be instant. So money moves and the person gets their money immediately. So it's about instant value and it's 24/7. So that's what we've now moved to, as opposed to maybe transactions which were T+1, which could still have been done on the older systems. So technically speaking, they're the same thing, but we want national switches that are instant and have inclusivity built in. So I think the what we advocate for at regulation level is an inclusive system which allows for the consumer to decide what channel. So the more that is available and at affordable rate, then you're increasing the level of inclusivity. So mobile, card, internet, USSD, NFC, whatever. So inclusivity is around giving power to the consumer and making sure that whatever they're able to do is affordable. And therefore, what we are talking about is building interoperable platforms, which you can allow for solutions to be built on top of that, which have the highest level of chance of bringing on board people who are financially excluded, be it card, be it, like I mentioned, any channel. So the policy regimes need to look at that. And actually countries, I think one of the best examples of a country that's done that is actually Ghana, who have built GIBS, and they have driven a fairly inclusive solution. And what they saw just before COVID is their numbers of volume of transactions shoot up, the number of people who are moved. And of course, things like QR code, which you've seen are massively important in countries like India as well. Let me stop there. I know Francesco wants to jump in. I gave a very short answer, but it's a very.
Well, what I was saying, this is $1 million question in the sense that these are ambitions that happen. There's a variety of drivers, going from the hope to have a national infrastructure or to something local to drive jobs and to drive modernization and so on. Reality of fact is that these type of infrastructure and operation are difficult to develop, and they are difficult to maintain, and in particular to innovate. And we are seeing it. We got plenty of cases around the world of some entities, some countries that had a domestic infrastructure and managed to develop it, and others instead that are struggling. And the second case is way more frequent numerically than the first one. So ambitions are legitimate, but having an element of realistic assessment of the type of capabilities that are required, the implication and the risks is something that would be somehow encouraged. Like we got in the sample of cases, together with the research, we looked at functionality, downtime, whatever we were able to find. We didn't manage to get to the downtime, but we found in local press a lot of instances of system not being available and being offline. If that happens in other markets where one major acquirer goes offline, they end up investigated by the central bank and checked, simply because when that happened, a part of the economy or a section of the merchants in a country, they stop operating. Consumers cannot pay, in particular when you are really relying on electronic payments to be able to transact. So
and what a way to erode trust and credibility of your digital payment infrastructure, right? Especially among a digitizing population. If you're having downtime and systems aren't working and you're having a bad user experience, that's likely going to deter you from use in the future.
Absolutely. And so developing a basic infrastructure, as we see all over the world, is becoming more and more feasible. But from here, we have to start distinguishing. Is a basic infrastructure going to be completely fit for purpose? Like, for example, fraud prevention. Is fraud going to be demanded completely to the market participants, or there should be something also present at central switch level that is able to filter out and support? Like, fraud is a massive problem in every single country around the world. So there is no exception of that. And so there's a number of different questions that have to be asked when this type of direction of investment or travel is being undertaken. And realism and a proper assessment of the capability required is absolutely paramount, because once you start the journey, you're in the middle of it, and you start seeing that you need to renew the system. We got one country in the sample of 5, Mozambique, where, based on the information that we got, the system is being redeveloped because of technical issues. I mean, the system has been in existence since 2014, so nearly 9 years. So these are also expensive systems to develop. So ideally, not learning by error could be given the number of options that exist globally between make, buy, use, lend as a service, and whatever, or leveraging existing infrastructure, is something that should be advisable.
So thank you for that. And a lot of what we're saying here goes to one of the questions specifically. You know, for countries that have not developed national payment switches yet, what are the key lessons you would recommend to ensure that they're inclusive and value adding? And I think you've both answered that question to a certain extent. You know, I'm hearing from you, Robert, right? Giving the consumer the option of how to pay, which payment rail and which payment method to use, making it affordable and inclusive. Another key issue here is thinking about the cost, the risk, and the technical sophistication required to bring those value-added services to the population. And so I want to, speaking about value-added services and innovation, I want to talk about e-commerce for a moment, because in our observation, enabling e-commerce is a huge digital driver, because consumers, at the end of the day, one thing that we have observed around the world is that consumers don't necessarily care how they pay. They want to access goods and services, and they want digital means to access goods and services. And a lot of times e-commerce, especially low ticket digital services like streaming, like gaming, you know, online marketplaces from both domestically and around the world, can be a huge driver of aspirational consumption and new digital habits. So I want to ask you both, let's start with you, Robert. You know, how, in your experience, how important is e-commerce? We have mobile top-ups, P2P, bill payment, kind of as those basic functionalities. But after that, maybe comes other types of habits like shopping online and making digital purchases. So I'm curious, your view on that, and what kind of technologies are required and capabilities are required to successfully enable e-commerce?
Yeah, thanks so much. So e-commerce is projected to be a big part of Africa's growth agenda. I think the number they're talking about is reaching, well, it's growing at about 14.2% compounded annually. So I think between 2018 to 2022, it sort of grew by about 20 to 29 billion. So I think that growth is projected to continue. Under the African Continental Free Trade Area, people are talking about trying to increase the relevance of intra-regional trade, intra-African trade, which sits at about 17% today. And within some of the numbers, they want to try and move that to 25% in the next sort of 10 or so years. And therefore, building out e-commerce platforms where people can trade will be fundamental. We've seen some attempts. Jumia, Conga, on the continent, they haven't reached their sort of, some would say that they've actually struggled a bit. I think there's an issue of logistics, which is critical, which is also missing at the moment. And then, of course, the payment rails continue to be a challenge. A critical challenge is also the cost, because when you're looking at a cross-border, let me just give you some of the numbers. You find that anything from 12% to 24% is what is charged for moving money, and so for every $100, you'd be paying 12 to 24%, $24 from a cost perspective. So and global average is about 6%. So that's $6 and SDG
huge
is one
cost,
of them.
very prohibitive in a lot of ways.
Exactly. So the arrangements of payments continue to be a challenge. So I think for me, and that's why one of the key things for me on this report is the only way to ramp that up is to have bespoke payment solutions which come in from non-financial institutions, so fintechs. So building out real able fintechs to play on top of that, then they will be able to give solutions that are nuanced to specific customer groups. I want to just mention one quick one, which also is building on what Francesco said with his other point. Pooling of resources will be very important as well, because if you don't know how to handle fraud and you don't have trust in the system, which continues to be a challenge, we shall continue to have a problem. So there might be a need to look at hosted solutions for fraud and see how you can share those resources, because that learning curve might take a bit of time. So for me, in conclusion, trust continues to be an issue. Stability of system is an issue. Not having enough fintechs participating to deliver specific solutions to the problems that we have today also continues to be an issue from a e-commerce perspective.
Terrific. And around the world, very much in a lot of ways, it's been fintechs who have been driving that agile and secure and low-cost payment experience in e-commerce. So Francesco, let me ask you, e-commerce on the subject of fraud, we talked about tokenization, and over the past decade that some of these domestic switches have been developing, we haven't seen those technologies be enabled. So can you speak to, why is innovation in this sense difficult? And how can countries that are working on building infrastructure from scratch, how should they think about these value-added services? So
to address your question, to be true, I would make it even more general, because it's not just these 4 countries where we haven't found evidence of e-commerce capability, tokenization, and so on. This is pretty common in a lot of other markets where we see even longer existing infrastructure that somehow is struggling with this type of innovation is complex. It's simple as that. Reality of fact. The more you get into elements such as tokenization and contactless, there are peculiar capabilities, technicalities that you need to have, and inventing them and developing them from scratch is not a straightforward exercise. I mean, kudos to those who are able to make it, but apparently is not an overly frequent. Secondly, you have the fact that you need to have scale and the ability to support and sustain this type of innovation. Every time you make an investment, that ultimately become a unit cost somewhere in a transaction and have to be depreciated over time. There are countries where we get called to look at the opportunity of developing variety of things, going from real time, and where you have a very, very, very small scale, the cost challenge becomes non-insignificant. Then you have to decide how you want to run it, subsidized, non subsidized. But the very second you start reversing that on the market, it becomes a problem of affordability and uptake. So
and that goes a little bit to Robert's point.
Innovating is a challenge. It's as simple as that.
Yeah. And that goes to Robert's point earlier about taking best practices from around the world and drawing on existing expertise and existing networks that could potentially help develop those capabilities instead of building from scratch. I think is a great point. A question, to your point, Robert, a moment ago, you mentioned the importance of involving non-financial institutions and having greater participation across the ecosystem. And that goes directly to a question coming in from Botswana. Would it be, I think this is referencing your slide, Francesco, that kind of shows limited participation from ecosystem players. So the question is, would it be correct to assume that limited participation is a result of local switch implementation not addressing the industry needs? Or other ideas on what is causing that limited participation?
Yeah, I'll jump in and give you a couple of examples. What happens when some of the countries or regional economic communities buy switches? They don't have a good grasp of what is being procured. So once they do that, it's a vanilla, which is not, they cannot sort of tweak it to the nuances in the market. If you are doing an integration, and I have first-hand example of some of these, you're charging integration costs for building specific APIs of $100,000. How many organizations can afford that? And for any other change request, there's another element. So people have bought vanilla switches, which later on become a little redundant, and to make changes to meet market needs becomes a fundamental challenge. With all the technology solutions that are taking place, Francesco spoke about different ways of delivering solutions, cloud, etc. But today on the continent, we still struggling to handle issues of where data should sit, basically the sovereignty of data. So if we're not looking to move to cloud solutions, you're not building sandboxes that allow for people to innovate and really be nimble around providing solutions for specific cohorts of customers, you will continue to have this challenge. So that is why you still see vanilla systems being built. Some people have built card systems and then they're trying to make them national switches. So it begins to, so you're retrofitting something which has no flexibility. So there's many case studies of this. But again, it all starts with the design and the initial architecture. So if you get that wrong, you will always be chasing your tail, and you almost need to then stop and look at reinvestment. So these are the issues that continue to
I love that. And that goes back to a word that you used earlier, bespoke, right? It's about, what I'm hearing is, take best practices and learnings from around the world, but make sure to develop something that specifically works for your market and your population, the use cases you want to enable. And don't make the mistake of simply copy pasting kind of vanilla infrastructure that is not achieving the goals that we collectively have around financial inclusion and payment digitization. Fantastic. On that note,
to address very quickly.
Go ahead.
In our research, we got the statistics around the participating organization, but we haven't had the chance to go down and investigate why participation is such. There could be a variety of drivers, going from risk management, the ability of policing the other entities, to industry protection. That there is literally a variety. So we can work on hypotheses, but even that would be a very far-fetched. That's data that is missing for the time being.
Got it. Okay, so a future research question, absolutely.
At least
So
from
on
our
this,
side.
right, absolutely. Well, what these sessions do is they create more questions than answers. That's always the case. So I want to go back to this question of, the possible limitations of local switches, because that's we're getting a lot of questions from the audience here. This is a great question here. So considering potential limitations in the capabilities of national payment switches, does this pose a constraint on banks in terms of their growth and innovation agendas, right? You may have issuers or acquirers or financial institutions that want to innovate, but to some extent are beholden to national switches, which are limited in their technology capabilities. So do you see this playing out? What are some strategies banks can use to continue innovating despite some of the infrastructure challenges that might be present in the market?
So I'll take that one. If you cannot innovate on one set of payment rails, possibly you may try to do on another set. The challenge becomes where you have a mandate. And if you got a mandate, then the mandated infrastructure with its own limit to whatever you can do, unless you start moving transactions cross-border, for example, having e-commerce operating from a cross-border processing capability. So the limitation, everything is relative, but the very second you start constraining to a specific set of technical capabilities, obviously you enable or prevent specific type of innovation to happen. And as I said, I don't have a view on why there are specific, for example, the participation is such and so on, but that's the nature of things.
Sure. So we're about to wrap up in just a couple minutes, but we have a couple more questions we're going to address. Before we do that, if we could go to the next slide. And before we wrap up, I want to give folks an opportunity to access and download the full industry report. And Francesca, if you want to take a moment to comment on your full report that's available.
Well, the full report is simply more data compared to what we've seen in the slides. It's as simple as that. So we go down and track and make available more information that we found. Simple as that. Once again, this is all based on research, on the available statistics and information that we got out there, and that led to some working hypotheses where ultimately the conclusion is there are a lot of very good initiatives out there, but developing one piece of infrastructure of this type is complex. It would appear that sometimes the effort is underestimated. So it's just a matter of being realistic when
Right.
considering that or when thinking of evolving one of these, or what it actually entails and how to best do it.
Okay. So there's the QR code. You can download the full report now. You will also receive a link to download it in your email following this webinar. But I wanted to put that up on the screen before we wrap up. We have two more really terrific questions from the audience I want to tackle, and then give our panelists a chance to say their final remarks. We might go 5 minutes over. If you can hang with us, terrific. If you have to sign off, no worries. Thank you for joining us. But I do want to go to these quick last two questions. Robert, there's a question here about and Francesco as well. You mentioned QR code payments, and the question around building a bespoke infrastructure that works for your market. Can QR payments be a tool to quickly start accepting electronic payments for merchants and users in Africa? Whether it be cards, fast or mobile money, can run under a QR code. Any quick high-level comments on the topic of QR?
So QR is one of the possible interfaces to instigate a transaction, to initiate a transaction and capture it. As an implication in terms of the device required, so not necessarily having to have a terminal. The back rail on which a QR code initiated transaction can be settled and cleared are multiple. There's one thing to keep in mind, that no retailer will let you walk out of a shop unless you have the completion and the confirmation of a transaction within a matter of seconds. Otherwise, you would have to either to take it on trust or to wait in the shop for the transaction to be clear and completed. So that the innovation that we see on the front end is very often very much dependent on what the back-end infrastructure is able to do. So that's something to keep in mind.
That's a great statement. Absolutely. Absolutely. Terrific. Okay, and one last question here, which I want to pose to you, Robert. I think this might go to, you know, something you mentioned at the beginning around governance and also public-private partnerships. What is the best funding model for these retail payment infrastructures, right? Private industry funding, central bank funding, combination of the two. How do you recommend, right, that these things get funded? And funded eventually means power and control and determining the rules and things like that. So what are your thoughts on that question?
That's a great question.
I see you smiling, so I'm excited to hear your response.
Yeah, I grapple with this every day. That's what I do for a living. So there is some little grant funding to catalyze, you know, some of the growth in rolling out retail payments. There is some concessional funding from multilateral institutions like AFDB. They have a fund called ADFI. World Bank has been busy trying to figure out that, but they do it under a global country program. So you've got to create your global country program, and then within that, show how you know you're going to use this. Private funding is also there, but you know, private funding is fine. But what happens with private funding? Then it ramps up, and you start getting challenges on return on investment. So you end up having very expensive infrastructure. I'm not saying I'm against it. I'm just saying what the constraints are. There's this whole new movement towards what they're calling digital public infrastructure or digital public goods, which are rails that now are looking at open source. So some people are providing funding for that, try and bring down the cost. There's some very interesting numbers that we got from PIX Brazil in terms of the actual cost of the CapEx that they spent. And it's not as high as one would expect. So yeah, so there's a lot of conversation in how to affordably build payment systems. But I always say that, you know, infrastructure is important, but I'm almost saying that let's try and look at cloud resources so that you're not building out expensive data centers, because these systems require high levels of availability. And that's the
future, right? Is making sure that we're future-proofing whatever investment we're making.
And quickly put on top data passport, data embassies, so that the country continues to control the sovereignty of data. So you look at that from a policy perspective. Yeah, so that's but great conversation. Thank you.
Okay. Well, we're over time. I think there's just been a lot of enthusiasm and interest in the topic. So just to close us out, I want to give both of you just a chance to make some concluding remarks that you would like to leave our audience with as we close out today. Let's start with you, Francesco.
Okay, thank you. So overall, we've seen a lot of development and a lot of effort going into the development of electronic payments and financial inclusion and so on. We got amazing lessons, some preliminary results, and some challenges. So it is a long journey. From our perspective, it is a matter of, once again, encouraging realism in terms of options available, capability required, risk, and medium and long-term implications, as ultimately these a good or not so good or not fast developing initiative have an impact on everybody's life, on citizens and so on. So there's a lot of potential to be still undertaken, and
a lot of potential and a lot at stake, kind of is what you're kind of saying, right? There's lives at stake here. Absolutely, absolutely. How about you, Robert?
Yeah, I think the problem statement is clear, and you know, Francesco continues to, well, it has added a massive body of knowledge in defining what that problem statement is. So we talk about at AfricaNenda 400 million unbanked, financially excluded adults, and that is a big number. That means they don't have a credit history, they probably don't have insurance, they can't access health insurance, and therefore their participation in economic transformation of the continent continues not to be at an optimal level. And that's what we're trying to solve for. So this is a topical issue. It's an urgent issue. And if we don't, accelerate the onboarding of people who are financially excluded, then in another 5 to 10 years, as a continent, we would not have brought on people who can really drive an uptick in our economic transformation on the continent. So when people talk about payments, it's a bit more than payments. It's actually transformation of people's lives. And therefore, we must leave nobody behind. So thank you for today's session.
Absolutely. Very well said. Thank you so much. Well, thank you both very much for your insights and sharing your expertise with you. And thank you to our audience members, especially those who asked questions, really drove the conversation. As a reminder, you will all receive a follow-up email with an access to the recording of today's session, as well as the full Arkwright report. And as our two panelists have so well stated, this is only the tip of the iceberg in diving into these issues and continuing knowledge sharing and driving this movement across the Africa continent. So thank you. We'll be in touch soon. Wish you all a very pleasant evening and hope to speak to you very soon in the future.